Big tech has stumbled, but is this a buying opportunity or the start of a bubble bursting? This is Sectors Up Close, and today we're talking tech. Big tech shares have been sliding, with Alphabet down 13% so far this year, and Apple almost the same, as traders have moved money away from America's most highly valued growth stocks and instead looked for value elsewhere. They are still trading at pretty high multiples though, with Microsoft, for example, at 31 times earnings and Meta at 24 times. So could they fall further? Well, Tyler Ellegard is a portfolio manager at Gradient Investments. Tyler, we've seen amid big tech's recent earnings reports more than $300 billion pledged for the rollout of AI, but when will investors want to see a return on that?
Yeah, I think we start to see the investors wanting that return either this year or next year. And we're starting to see some of that come through. We saw Meta being able to monetize their AI platform with ads. We're starting to see Microsoft monetize it. So it's starting to roll, but I think it's really going to come down to, especially with the $300 billion, at the end of this year or next year, investors will care more and more about the return on investment.
Microsoft got in on first, of course, with OpenAI, the maker of ChatGPT. Are they able to conserve that lead?
I think so for now. But we're seeing the significant investment into AI across the hyperscalers. And I believe these hyperscalers are less focused on what DeepSeek was doing. I think it's great for the space what DeepSeek did. Kudos to them for the research that they're able to do. But I think the hyperscalers will adjust their models to do that, and they're more focused on advancing AI forward into what we call artificial general intelligence. And the reason for that is, just like you had mentioned, ChatGPT, OpenAI, Microsoft, those have really been, if you talk to anybody about artificial intelligence, that's the first thing that comes to mind for them. And so these hyperscalers are focused on being the first one to have that artificial general intelligence product or service, because that's who's going to win the AI arms race to that level.
And how close are they to coming up with that product? What do we know?
I still think we're a ways out. And when I say a ways out, that could be a couple of years with how quickly everything is advancing. But again, it comes down to the question of how are they able to monetize it? Because we're spending $300 billion this year. It's likely going higher next year. And so if they can't monetize any of these products, then investors are going to have an issue. So I think as long as we can get there and there's some way for these companies to monetize it, I think it's a couple of years out, but I think it'll be great for the space.
How much are they likely to be punished by investors, though, if they don't get it quite right? Apple, for example, had to withdraw some AI features that weren't quite working. How damaging is that kind of thing?
Well, I would think back to a good case study on this is Meta and their foray into the metaverse. They were spending, and quite frankly still are spending, a significant dollar amount in the metaverse, but there was no return on investment, and we saw what happened with the stock at that point. So that's a great case study, and I think that's the example that we could use going forward with these companies.
How much could big tech be impacted by tariffs being implemented by President Trump's administration, which are due to kick in next week?
Yeah, I think that's still up in the air. There's a lot of uncertainties about what's going on with tariffs and how long they're going to be in place, what specific products get exemptions or exceptions. So for us, it's really a wait and see, and we'll hear more in the earnings quarters from the companies themselves. But there's a lot of uncertainty right now for us. So we're not really making a call on one way or another at this point.
You see the recent sell-off, though, as a buying opportunity for big tech, don't you?
Absolutely. As you mentioned at the beginning, tech is in a what we call a correction, 10%. And within that tech space, there are certain companies that are even down 20 to 25% from the recent highs. So I think there's a great opportunity to start buying some of these companies.
What if the problem is bigger, though, if they just can't prove a profitable use case for this investment in AI?
Well, I think there's areas of the AI market that maybe not the hyperscaler specifically or the large language model producers or the NVIDIAs, but I think there are specific companies in this space that will be able to monetize and are already showing that they can. So I think AI does start to broaden out a little bit rather than being dedicated to the Magnificent Seven or the Big Five. So I think you do see some winners, and I think the AI market broadens out from here.
Tyler, there are still some huge valuations in this space, though, aren't they? So do you think that the bigger tech companies might have further to fall?
I think valuations have actually come down quite significantly. Just a couple months ago, they were trading in the high 30s, and now they're sitting in the mid 20s versus a S&P 500 that's sitting at 20 times valuation. So the growth rates of these companies surpass that of the S&P 500. So yes, the valuations are high, but I still think there's opportunity here for those specific companies.
That was Tyler Ellegard of Gradient Investments. Don't forget, you can watch more videos on Reuters.com.